Hey guys, how's it going? I'm gonna set up this room real quick, and then I will send the link over to Jasmine to join this session. So this session's with Jasmine. I won't be answering any questions. Just a reminder, I'm just going to be having this private session with Jasmine, but you guys are free to sit in and listen to what we're covering today. So let me just finish setting this up real quick, and then we should be good to go. Let's link over to Jasmine. Set up. I'm looking for some scalps right now, guys. If I see anything, I'll call it a trade, but I don't really see anything right now. Market's kind of slow overall, which how it's how it has been for this whole week, pretty much. So, all right, this looks good. All right, I think we're good. I'm gonna send this link out to you guys for the people who want to sit in. All right, cool. That all set up there. Yeah, just waiting for Jasmine to show up, and then we're gonna get started with her session. So we'll see if we see anything here. I'm still looking for some scalps here, guys. So I'm looking for some scalps here off US 30. I don't see anything right now. I could probably look at the other indices as well, just to see if there's anything else that we can, possibly take. But I don't think there's going to be much right now. It's pretty slow during Asia session. A couple of zones off here. No scalps there off the Aussie. China 50. Looks like the Spain 35 has a bunch of entries here. I'm not sure if anyone took these trades, but there's a whole bunch here that are available. Off this. Yeah, looking at the Spain 35, there's a couple entries right here, but they're coming from both the sides, and it's choppy. So I wouldn't have taken these over here, but the pivots are starting to angle outwards right here for a buy. So I probably would take one of these buys here. There's a whole bunch. There's 1, 2, 3, 4, 5. Looks like if you take this one right here, it's on its way up. So here's Jasmine. She made it to the room. Let me go pull her up real quick. Hey, Jasmine, can you hear me? I think your audio is loading right now.
Hey, how's it going?
Hey, how's it going? Doing good. How are you?
I'm good. Good
to hear. So how's your trading been? You been picking stuff up, or are you still like practicing?
Well, I thought I had it down pretty well until this week happened, because I've been working pretty much every day, going back and watching videos and watching your live streams, trying to get everything down packed. And then this week happened, and It wasn't.
Yeah, it's been a bad week well, not a bad week, but it's been a choppy week. Like even myself, I haven't really been trading as much. So this might have been a bad week for you to like really hop into it.
Yeah, I haven't been really seeing anything, and I thought maybe it was me.
No, it's me too. It's both of us. A lot of other people have been doing different stuff. Like they've been going on the shorter time frames, which is riskier, but you know, they've been catching stuff. But I haven't been catching those either. So that's like, you know, that's on them.
Right. This is true. So yeah, I had some questions that I actually wrote down. So I heard you in live yesterday talking about some Forex pairs that you normally trade, that you think are the best. Do you mind sharing those again?
Yeah. For the Forex scalp trades, I usually scalp them on the 30-minute. So I would go on the 30-minute, and I usually scalp like the ones that move a little faster. So it would be something like the major pairs. And so I'll go down the list. So the first pair would be probably AUD USD, Euro AUD, Euro NZD, Euro USD, GBP AUD, GBP NZD, and GBP USD. So those are the main ones that I scalp.
Gotcha.
There's other majors there that you can scalp as well. Like there's NZD USD and UJ. But I mean, you can add those to your list if you want. Well, what you're looking for mostly are the pairs that actually move, right? Because that's, you know, in order for you to scalp, you need something that actually moves. So you can actually go to like any pair that you like, and you can just see if it actually does move. You basically want it to move like 20 to 30 pips. So if you just like measure the swings, like how they swing from like down here to up here, and you're like, okay, this swings like about, you know, 25 pips, then you can see that AUD USD actually moves and you can scalp it. Because the thing is, if you're trading something that's like CAD JPY, for example, right? If you're trading something like this and it doesn't really move, like actually this does move. Let me find one that's slow, like Euro GBP. This one moves way too slow, so you can't really scalp this. You know, if you just measure the pips, it only moves like 10 pips. So if you're trying to cover this, you got to cover the spread, which is going to be about 2 or 3 pips. So that's like 6 pips already. You're only going to be able to make like 2 pip profit. It's not really worth your risk, you know?
Right.
Yeah. So you kind of want something like if there's something that you really like to trade. I personally like Euro AUD and Euro NZD, and like, you know, anything that crosses with the AUD and NZD pairs. Because if you measure these, you can see from the swings, these move like 70 pips. Like you can actually scalp these.
Gotcha.
Yeah. So it's a big difference, you know, in comparison, because you just want something that actually moves. And that's why I normally scalp US 30. But if you're looking to scalp, you know, Forex pairs, it's possible. It's just, you got to find one that actually moves.
Yeah, see, I was just trying to get familiar with it as far as that. I actually did some scalping last week. I think it was UK 100 and it was another one. But I did fairly well in those just by looking at, you know, the rejection off the pivots and stuff. But I was having more so a problem with gold, and I seen you do that one today. So you draw your zones throughout the 4-hour chart?
Yeah, so depends on like what are you trying to trade it for like intraday, or are you looking for like scalps?
No, I was looking for intraday.
Okay, yeah. So if you do intraday, I usually the 4-hour is usually a good starting point, because the thing with gold is it moves really fast, but it does respect the 4-hour chart. So like basically when I mark up my chart, like mark it up for the intraday, I'll go on the 4-hour and I'll draw my zones on there first, and then once I have my zones drawn up, then I'll just show you real quick. I'll draw these just real quick so I can show you what I'm looking for. Because basically, if you draw your zones on the 4-hour and you go on the shorter time frames, like say the 1 hour, 30-minute, 15-minute, I mean, depending on where you want to trade it, you'll see that it respects it a lot cleaner when you do it that way. So like right here, I got these zones drawn up. I think the closer zones were like around the 2 hours, somewhere around here. So like for gold, it's a little different because it doesn't move as smoothly as like Forex pairs. So like when I do this, if I don't see anything on the 4-hour, because like for example here, the 4-hour is like the previous zone is like way up here, and if you measure that, that's a far away. It's like 200 pips, like almost 300 pips. So this is way too far off. And then if you go on the higher time frame to grab the lower zones, this is even farther. This is, you got to go on the weekly to get the lower zone. And this thing is like so far down where it's kind of like you got no other zones within there. So instead of going the higher time frame, I'll go like one lower. So from the 4 hour to the 2 hour, and then I'll just draw some more zones from there, just to, because you know gold moves quick, so you kind of want to know what's going on in between those two zones.
Right.
So yeah, if you do that on the 2 hour, then you go back on the 4 hour. Then from this point, you kind of have let me get a lower zone from there too. So there's another one down here. So once you got these marked up like that and you go back on the 4 hour, you can see that it respects it on the 4 hour. But if you wanted to trade intraday, like on the 1 hour, you can go down to the 1 hour and you can see that it cleans it up a whole lot more. Like you can see more movement, but the zones still respect every time it bounces off. And even if you wanted to go on like the 30-minute, it's still some clean rejections there. You can still trade in between these zones.
Gotcha.
Yeah. So like the baseline would be 4 hour. And then if you don't find something close on the higher time frame, you could go down to like the 2 hour. And that usually finds some pretty solid zones for you.
Another thing that I was looking at, because like I said, I do UK at 100. Just the entry point off of those, because sometimes like I'll see a rejection and I don't know if it's like a false rejection. I'll see a rejection for a sell and then it'll shoot up for a buy. I'm not sure when to enter and when to get out.
Gotcha. So are you doing the Snipe strategy for that one? Or are you doing something else?
I did the scalp. I'm open to learning the Snipe strategy.
Yeah, which one are you applying? Because I can pull something up, like if you have something in mind where that happened. Do you trade on the 10-minute or do you go on something on a different time frame?
I was on a 10-minute. Yes.
Okay. Which scalp strategy were you using? Were you using the pivot or using the
pivots? Yes.
Okay, gotcha. Okay, cool. Yeah. So the thing with the because I personally haven't used the pivot strategy on here. I mean, it looks like it does work sometimes. Let's see. So yeah, there's a couple decent trades here. Like if you took this one, this looks like this would have been pushing up. And if you took this one right here, that one looks all right too. But yeah, you were mentioning you don't know where to put your stop loss TP, right?
Yeah, I don't even know like the correct way to enter it, I guess, too.
Okay, yeah. So I'll show you an example right here. So if you're using the snipes or the pivot strategy, I'll mark this up for you right here. So basically for the K2 pivot strategy, like first you want to look for a dang, I haven't used this strategy in a long time. So confirm trend using K2 pivots. Second is confirm what was it? Retracement. 3, confirm rejection off K2 pivot area. And then lastly, confirm valid K2 signal. So once you have those set up right there, and then I'll show you where to put your stop loss because it's going to vary. Like for the strategy, it just depends on where you want to put it, depending on your risk. So these are the requirements for this. You just want to confirm the trend using the K2 pivots. And basically, in order to do that, you just want to make sure that price is below the pivots are angling out and they're spread out, kind of like how they are right here. So for right here, you can see that if I turn this off, the candles, you can see that the pivots are angling all downwards and they're kind of spread out, right? They're not like crossing over each other.
Right.
So this is going to indicate that price is trending downwards. Vice versa. If price is going up right here and you see the pivots are angling upwards and they're spread out, that's going to indicate an upwards trend. So
gotcha.
This would be an upwards trend and this would be a downwards trend. You just want to make sure that the pivots are angled in the same direction and that they're spread out. Once they start to cross over like this right here, this wouldn't be trending. This would be like consolidation around this area. Because if I just draw this right here and then I turn the candles back on, turn this off. When I turn the candles back on, you can see that it's consolidating. It's like bouncing around, going sideways. Because right here, it's going straight up, comes down a little bit, consolidates, goes up a little bit, comes down, consolidate, and then it starts to come back down from this area right here. You get what I'm saying?
Yep.
Okay, cool. So like for the first requirement, you just want to identify that the price is trending. So right here, price is trending down. So that's the first requirement. the second requirement is you want to confirm a retracement. So basically you'll just look back to when price retraced up. So you can see price was coming down this way. This is where the trend down started.
Mm-hmm.
And then price started to retrace up from right here.
Right.
So this would be the second requirement. You just see the retracement because the low was established here and it pushed up. So that would be the retracement. And then the third requirement, you just want to confirm that price rejects off the pivot area. So it doesn't have to reject off a specific pivot. It just needs to reject off like, you know, any area within the pivot. So the pivot's right here. You see all the wicks. So price is coming up and it's just bouncing off the pivot. So it comes right back down from this area. So that would indicate that price is rejecting off this pivot and coming back down, right? Do you see that?
Yes.
Okay, cool. So we got all three requirements right there. We have the trend coming down. We have the retracement right here. We have the rejection above here. The last requirement is you just need to confirm a valid K2 signal. So we turn on the momentum indicator right here, and then we got a valid sell signal right here. And you know the difference between a valid signal and an invalid signal, right?
Right. It has to be red and red or
green and green.
Red. Yep.
Yep, exactly. You're perfect. So right there, we got all requirements. We got the trend going down. We got the retracement right here. We have the rejection above here. And the last confirmation is the K2 signal right here, the valid K2 signal. So once those are all met, you can enter a short position on the close of that candle. So what you're doing is you're basically waiting for this candle to close. As soon as it closes, you can enter a sell position like right over there, right? Like right when it closes. So when that happens, you can place your stop loss either at one of the last two pivots, which would be the orange or the red right here, you know, depending on your risk. If you're trying to have a tight stop loss, this would be closer than the swing. But if you want to have a wide stop loss, you can put your stop loss at the swing. So there's a couple different areas you can place it. You can place it at either one of the last two pivots, which would be the orange or red pivot. And the reason why we keep it open is because sometimes it might be too close, right? Like sometimes the pivot might be like way down here and it might be like way too tight. Right. Or in some situations, the swing might be like way down here. Like if price just comes up and swings up slightly, it'll just be too close. So you kind of want some cushion, you know, where price is. Those are one of the two ways to do it. Either put it at the last pivots or at the swing. Or if you just want TradingView to do it for you, you can just zoom out of the chart. You can hit the short position tool and then TradingView will plot it for you. But if you do that, it kind of makes it like a little too wide, right? So right here, you went from risking 100 pips to now risking 400 pips, right?
Right.
That's a big difference. So like, it's really on a case by case basis. Like if you feel like you think it's going to move that way, like if you feel it, like, you know, you have an instinct where you think price is going to move for a big push, then you can do that. But me personally, I would generally put it either at the pivot, the first swing, or the second swing right here. Okay. And you can see that they're different points. Like right here is about 290 pips. This is about half of that, 180 pips. And then down here would be like about 100 pips. So you have a good range depending on, you know, if you're trying to risk a little bit, medium amount, or like the full amount. Gotcha. And then I'll show you how it moves from here. So let's start with the farthest amount over here, which is about 290. So I'll just put 290 for the TP and 290 for the stop loss. If we were to let this run, you can see that it ends up hitting TP, right? So it doesn't really matter if you put your TP there. Like obviously your risk is going to be higher if your TP is farther out. But if you put your TP up, sorry, my dog's barking.
That's okay.
So you could either put your TP above there, or if you put it right here as well, it would still hit TP eventually, right? So if you put it there or you put it here, this would have hit TP as well, right? So it doesn't matter if you put your TP at the pivot over here, if you put your TP or your stop loss at the pivot here, over here, or over here, you know, depending on your risk, if you're able to handle that risk, that could be cool too. Like what you can do is if you want to put your stop loss that wide out, you just got to make sure to adjust your stop loss, right?
Right.
So if you just want to set and forget, you should probably put it somewhere close, like right here. If you don't want to bother with it, you just want to let it run, then you're probably better off putting it as close as possible. If you're able to manage it, then you can put it farther out and then you can just adjust it. So as price moves down, one way of doing it too, like this is one way that I used to trade the pivots. What I would do is I would just, when price moves down, I would move my my stop loss with the pivot. So you can see as the orange pivot moves down right here, I just move my stop loss to there. And then as the pivots keep moving down, I just move my stop loss with it.
Right.
That way I can go for like the bigger move. And then, but this would just take more work, obviously, right? So here's a stop loss now at this line. And then as it continues to move down further, you can just keep moving your stop loss deeper in profit. It's just more work. So it just depends on you if you want to put in that work to actually monitor it and see as it comes down. Because if you were to do this, it looks like you probably would have locked in more profit if you just kept,
moving
riding it down. Because it looks like you would have cut yourself a little short. Because if you just went for the full TP, you would have locked in 290. If you kept, riding it down, you would have lost a few pips right here. Like you'd still be in profit, but you'd throw away maybe about 50 pips.
Gotcha.
So it just depends, it depends on you as a trader. If you like to actively manage it, then this is probably your best option. Like if you're really careful, this is probably your best option. If like you really don't care and you just want to, let it run, then you can just set the TP at where you feel comfortable with.
Okay. That makes sense.
Yeah.
So what about the Snipe strategy? Can you show me that one?
Yeah, sure. I'll show you the Snipe strategy. So I'll just put the requirements right here. This is pretty much what everyone else has been using lately. It's been like, that's like the most popular strategy now because it's pretty accurate and it usually hits like pretty quickly. So like this would be the K² Snipe strategy. And this would be I personally use it on a 10-minute time frame, but people use it on all the time frames. So there's not really one time frame to use it on. It's just, if you're using it on the short time frame, your target's just got to be tighter. But I think the 10 minutes is probably the best time frame because you get some pretty good entries and then you don't get that much noise. Because if you go like on the 5-minute or the 1-minute, you're going to see a lot of choppiness and you're going to get a little confused. So I personally do it on the 10-minute, but let me show you the strategy here. So first you would, you want to confirm a wick rejection off the K² pivot, which can be any pivot. The second requirement is going to be confirm a wick rejection off the K² SR zone. And last, you just want to confirm the wick rejection off K² pivot does not touch the candle body. And that's pretty much it. You can enter on the open of the next candle. So let me look for an example here if I could find one. All right, that's perfect. There's a bunch of entries right here, actually. So what I'll do is there isn't. Let me see if I can find one. Yeah, this week was kind of messy, so it's kind of hard to find some entries here. Let me just back up a little bit, see if I can find anything over here. Yeah, because I didn't really see too much on the 10-minute, but I did see a lot of people trading like on the 1-minute, which I don't really recommend unless you're like really comfortable. Because this strategy, like I feel like people get like way overly confident with this strategy sometimes. Like they just have a couple wins and they just think like, they're the best trader ever. which I mean, I would feel the same way because this strategy works really well and it's really accurate. It's just like, if you start bending the rules, because I always teach people to use a 10-minute, but if you go on the 1-minute, that's where you start to take like a lot of risk. But yeah, go ahead. Let me go over here. So this would be an entry off this one right here. So let me just run this right here. So first you just want to confirm a wick rejection off a pivot. So right here off this green candle, you can see that we have a wick rejection off this green pivot right here. So that's the first requirement. The second requirement, you just want to confirm a wick rejection off a K² SR zone. So this zone I drew when I had the K² SRs open right here. So if I turn that off, you can see that we have a zone right there. Well, what I did is I just drew over it so it can be easier for you to see.
Right.
So basically after you draw your zones there, I turn that off. And that's pretty much it. You have the wick rejection off the pivot and a wick rejection off the structure. And you just want to make sure that this pivot doesn't touch the body. And the body's way up here and the pivot's way down here. So obviously it's not touching it, right? So once you have that set up, you can enter on the open of the following candle. So right here, you enter a long position and you could put your TP stop loss. I don't know what the sweet spot is for UK100 because I don't trade it, but I think it's about 250 to 300, somewhere around there. It's between 250 to 300. So once you have that set up, you can just let it run. And then after you let it run, you can see here that it went straight to TP with like literally no drawdown, and it hit TP within like a few minutes.
So the pivot and the wick has to be in the zone and it can't touch the body, right?
Not the pivot, just the wick.
Just the wick. Okay.
Yeah, so the wick's the main thing you're looking at. You're just looking at the wick, and you want to make sure that it's touching the pivot and the structure. And the reason for that is because we're trying to identify a hint, like a hint from the candles showing that price is pushing off this area right here, and that it's going to shoot on up, which is exactly what happened there. So
Right.
you're just identifying hints in the market, telling you or hinting to you that price is probably going to push up because you can see this rejection off this structure and this pivot. So it's kind of like a double confirmation or a double strategy, because some people just trade wick rejections off pivots, and then some people trade wick rejections off structure. So if we put 2 and 2 together, odds are it's probably going to push up in that direction. Mm-hmm. So with that said, you would take this trade here, and then you would just obviously let it run. So that's one entry there. That's for a buy. And we actually got another entry right here off the same thing. So I could trade the same thing for a sell. So I'll just back up to this area over here. And then it's pretty much the same thing. Let's see. Yeah, it'd be this candle right here, actually. So this green one right here, it's rejecting off the pivot and the structure. So this same green candle right here, I'll just rewind it a little further. It's rejecting off the pivot and the structure right there. It's a clean rejection right off that green pivot and off that structure. Same exact thing in the opposite direction. So right here, you enter a short position instead of a long when it closes. And I think we said it was like 250 or 300.
Yes.
Yeah. Okay. So 300 right there. I think 250 is actually better, because since we're scalping, we're not trying to go for like, a big move. We're just going for that small move, because you can see that these trades kind of happen right next to each other. Like this happens here and this happens right here. So if you took both of them, you'd have like some quick wins on both sides.
Gotcha.
So right here, we have this all set up. You let it run. And then you can see there. Yeah. So it's going to depend, because I don't trade this, so I don't know if it's 250 or 300. It might be better at 300, because it looks like 250 might be a little tight. So maybe it is 300, maybe it's 250. Honestly, you'd have to like play around with it and figure it out.
Okay.
But yeah, just letting this run right here. There you go. Full TP right there. So I think 250 might be too tight. Now that I'm thinking about it, it looks like these candles kind of move. Let's see. Yeah, 250 is way too close, because if you look at these here and you just measure the candles, if one candle moves like more than 250 pips, it's like you're kind of risking a lot.
Okay.
Yeah, so I'd probably leave it at 300. I think it's even 500. I'm not sure. I might be wrong, but try asking in the group later. Just like pop the question, because I know some people do trade it. I just don't know what they base it off. But yeah, that's an entry that right there. There's another entry right here as well. There's a whole bunch of entries actually. So like the week before, so this week's kind of trash, like from the 8th till now. But if you look here on the 5th, there's back-to-back wins. Like there's a win right here, win right here. There's another one right here. I could even show you this one. Like last week, people were on fire. It was just, it was shocking me. I was like, damn, these people are like killing it. And I was like, I got to start staying up during London session, because everyone is like making so much profit.
Yeah.
So like right here, same thing. This green candle, wick rejection off the pivot and structure. You enter a long position right there. And then I guess we can set it to like 300. And then if you set that there, you let it run. And then, yeah, it looks like it hits TP right there. So there's one entry right there. And there's actually, so if you miss that one, there's actually another one right after right here. So that's what's cool about I think that's what people like about this strategy so much, is that there's so many entries. And if you miss one, it's cool, because there's going to be another one right after. So for this red candle, same thing, wick rejection off the pivot and structure. You enter another long position. And if you entered both of them, you could have doubled up your profit off this, because you could have had 2 positions running at the same time. So if you let that run there, you would have hit full TP off this, and you would have hit full TP off this. And then if you just kept, if you kept watching UK 100, because I've seen some people in the group, like they don't even sleep. Like they'll be trading 24 hours because they keep hitting it. So like, for example, here, if you were hitting this right here and taking these trades, and you just kept watching the chart, and then you waited for the next one, which should be right there, you have like 3 wins there. And then another one right here, you waited for this one, 4 wins right there, back to back to back, right?
Wow.
Yeah. So I mean, that's, you could see why people like the strategy so much, because it's so accurate.
Right.
And it's
so even if the body of the candle is still in the zone, it's still good to go as long as the wick rejects off the pivot in the structure.
Exactly. Yeah, the body doesn't really the body isn't really our concern, because especially on the 10-minute, because if you're looking at candlestick patterns, if some people trade candlestick patterns, if you're looking at them on the shorter time frame, odds are they're usually just noise. They're not really telling you anything. Because if you look here, like if you just look at any candle,
Mm-hmm.
like people would always tell me stuff like they'd be like, oh, but isn't that a doji? And I'm like, yeah, but it doesn't matter because like for example, right here, this is a reversal candlestick pattern, a doji, right?
Mm-hmm.
It's like it's like no body, wick on top and bottom. Usually if you see this, it's like a reversal pattern. It's supposed to come down. But if you look at this here, it is a complete opposite. It goes straight up.
Right.
So I don't really look at the body at all. We're just looking at the wick because the wick is
Okay.
giving you that little hint of like what's going to happen next. Because it's kind of like if you just look at the chart and you see how the wick touches the pivots, whenever it touches the pivots like that, you can see like here's another entry right here. Like I didn't even look for this, and I just looked here, and there's an entry right there. So if you just look at the wicks, whenever they touch structure or the pivots, it generally rejects off them. So like as you see here, price is trending down, like price is going down, and you see these wicks hitting from the top end, like it hits this candle right here, this candle right here, and then after that it just drops, right?
Right.
Again, right here, you see how these candles right here, the wicks are just touching the pivots.
Mm-hmm.
They just end up dropping after they hit. So that's like the first confirmation. This is the main confirmation that we're looking for. It's just the structure is going to be that secondary confirmation indicating that, if we got that double rejection right there, it's probably going to drop. Because those are like two areas of resistance or support, depending whether it's hitting from the top or the bottom.
Right. Okay, I see one right there too.
Oh, this one right here.
Mm-hmm.
Yeah, and there's a bunch. Like, see, for example, here, if you missed this first one, you could have caught this next one right here.
Right.
Yeah.
And so does this work for just indices and stuff, or does it work for Forex too?
It works for anything. Like I've seen people use it for Forex. If you're trading on Forex, you probably want to go in the higher time frame, maybe the 30-minute, because obviously you need it to move enough for you to catch some pips.
Right.
So people use it on the 30-minute. Some people use it on the 15-minute. People use it on crypto too. I've seen like a couple people use it on Bitcoin and XRP. So you can use this on anything really. It's really up to you. But before you do it on live, I would recommend that you actually like go through it and see that it's actually hitting. It's probably going to hit. It's just, so you have that confidence. You're not scared when you take the trades.
Okay. Right. And I think that's what it is. A lot of times I'm just second guessing myself.
Mm-hmm. Yeah. It all comes with practice, because the only way that you'll be able to trust your strategy is if you know it works. And the only way to know if it works is if you back test it, because that's what it really is. Trading is all like psychology for the most part. If you got a strategy that works, it's all about execution. And if you get scared and you pull out a trade too early, or you just, you start doing things differently, or you take shortcuts, that's where the errors really come into play.
Right. So if I was trying to start first of all, what is the I hear you guys always talking about FTMO.
Mm-hmm.
So somebody said that it's a funding, they fund.
Yeah, so I'll pull up the website for you. So FTMO, basically, like what you do is you got to prove to them that you can trade. Like you can trade consistently. Like what they're looking for is that you can trade consistently and you're not just a gambler, right? You're not just getting lucky. So basically with FTMO, I've been with them since like May. What they do is so you can choose an account size. You can choose, between 10,000 to 200K. Like those would be the account sizes. What you do is you'll pay the little challenge fee. So if you're doing a $10,000 account, I don't recommend anything below 50 because it's kind of pointless. You might as well just trade your own account because your profits aren't really it's not really gonna translate to like the time you put into this account, because you're not gonna get paid for like maybe 2 months. Like for 2 months, you're doing this challenge. So if you're trying to trade for money, you might as well just trade your own personal account if you're doing something this small. But once you go to the 50K and the 100K, that's where it starts to make sense, because you could start risking a lot more and make more profit, versus using a normal account.
Right.
So basically what you'll do here is like you'll pay the little challenge fee. You'll have 30 days to reach the profit goal, which will be 10%. And then there's a couple requirements. Like you can't lose more than 5% a day. And, and if you're trading properly and using proper risk management, it should be no problem. The problem with FTMO and new people, like new traders using it, is that they don't understand the logic behind it, right? They're like, oh, I got a 100K account. Why can I only lose 5K? And it's like, you know, if it was your 100K, would you be risking more than 5K, right? Like, and people don't see that. And it's logical, like it makes sense. But for some people, they're like, well, that doesn't make sense. Why would I want to trade that account and only lose this much? And I'm like, you know, put yourself in their position. If you're giving somebody 100K, you're not going to want them to blow your 100K like with a couple of trades or not or whatnot.
Right.
So basically, you'll have a couple of requirements where you can't lose more than 5% a day, which is 5K on a 100K account, and you can't lose a total of 10,000. And that's actually a lot of money. Like if you think about it, it's a lot of money.
It is.
But people think, oh, I got a 100K account. Like what's 100K to what's 10K to them? And I'm like, what's 10K to you? You know, like if you really think about it, it is a lot of money. So like these are the requirements that you got to meet. And I always recommend, even with a personal account, you should only be risking like 1 to 3% max. And especially with a 100K account, you don't even need to lose that much because 1% is already 1,000, 3% is 5,000 is 3,000. So you should be risking maybe less than 1% per trade, depending on how you're trading it. And you should be fine because, you know, our win rate is pretty high. So as long as you just keep stacking those wins and not losing, you know, your capital will just keep growing and growing. So basically within the first 30 days, you have to make 10,000, which is not that bad. Like you think about it, you got 30 days. If you trade every day and you make 1,000 a day, you can make that 10,000 easily.
Right.
And then after you pass the challenge, you'll go to the verification where you have 60 days to make half the profit. Instead of making 10K, you only got to make 5K. This is just them verifying that you're legit. You didn't just get lucky for that challenge, right? Because sometimes people get lucky. They'll take a trade, they'll have a big win, and then they think they're the shit, right? They're like, oh, I'm the best trader ever because I made like this money off this trade. But then they don't show you that they lost that money off the next trade right after.
Right.
And that's why FTMO, it kind of trains you to be a professional trader because you got to be really professional about it because you can't really fake this. You got to pass the challenge and you got to do it again or do half of what you did on the verification. So once you do the challenge, you pass, you go to the verification. Once you pass the verification, you get a funded account, which is a real 100K account. And then once you trade for a month after, because it like once you get your funded account, you have to trade for a month, and then a month after your first trade, that's where you get your payout. So as long as you're positive, like even if you just made a penny off like that whole month, they're going to refund you your challenge fee. So the challenge fee that you paid to take the challenge, they'll give it back to you. They'll either give it back to you or you can get another account. Because what you can do is you can stack accounts. They give you a 400K total. So you can start with the 100K, and if you want to do it again, you can merge those into a 200K, and then you can keep doing that until you get 400K. But yeah, once you do that, once you're all done, you're funded, you get to keep 70% of your profits at the end of the month, every month.
Okay.
So, you know, it's pretty lucrative if like you think of it as like from a business perspective, because once you get funded, you're trading risk free because you're not risking your money anymore because you already got your challenge fee back, and everything after that is just your profit, right? You keep 70% of it, and you don't have to worry about losing your own money because you're just trading their money.
Right.
Yeah. And that's the way, that's why I prefer to trade with FTMO. And another thing with FTMO is like they pay you as an invoice. So like you don't have to pay the same taxes as you would for your trading profits. Because generally when you trade your own account, you got to pay capital gains. So your tax rate is going to be a lot higher. Right. And that's something that a lot of people don't realize. But I mean, you got to be profitable to have to pay those taxes. And majority of people aren't profitable. So they probably don't have to deal with that. But once you're profitable, it starts to make sense.
Right. Okay. Yeah, that sounds more reasonable. That makes a lot of sense.
Yeah. But I wouldn't do this until you like make sure you're profitable at least. Like make sure you're consistent because you don't want to do this challenge and then blow your challenge money, right? You want to make sure to do it once you're 100%, you're good to go.
Mm-hmm. So what's some good brokers?
So I only recommend like regular brokers like Forex.com, but for my personal US, because we can't trade indices on Forex.com, so that's why he goes away from my personal. But I'm kind of pushing away from he goes away, and I think I'm just gonna focus on FTMO because it just doesn't make sense to me to trade my own account when I can make more profit trading with FTMO.
Right.
So I personally use he goes away for my personal indices trading. And they're not that bad. I mean, a lot of people got bad things to say about the unregulated brokers, It's just I don't want to like recommend an unregulated broker to someone and then they have issues with them, right? So that's why I only recommend U.S. regulated brokers because I'm not trying to come off as a scammer, like me trying to recruit you to something that doesn't really, isn't completely safe. Like it works, but on my Hugo's way, I only keep like about 1,000 in there because if I lose that 1,000, I'm like, all right, whatever, that was my risk. Um, but I wouldn't necessarily trade a big account with them. That's why I prefer to trade with FCMO.
Gotcha.
Yeah, but if you're trading like a small account, I mean, Hugo's way is fine. You just gotta be aware that there's a risk that come with it. Like they can disappear. If something happens to that company, they can disappear, and they're located like in some random island. So, like, there goes your money, right? If they disappear.
Right.
Not that I think that'll happen because there's a lot of people that use them, but
Mm-hmm.
they're probably one of the like if I was to recommend something that I use, it would be Hugo's Way, just because it's easy to use and I mean they're pretty straightforward.
Gotcha. Gotcha. Okay. All right. Well, I'm a practice on this, and hopefully I have a better week.
Yeah, I would take it easy this week. Like take trades, but don't take like crazy lot sizes and don't
Mhm.
like over trade. Just make sure you're taking trades when there's an actual trade there. Like don't force anything.
Yeah.
Yeah,
Okay.
because I think next week should probably be better. I'm basically done with this week. Honestly, I'm not really trying to go too crazy this week, like how
Hmm.
I've been going like the past couple of weeks. Because I
Right.
locked in a lot of profits like the past like 4 months now, so I'm not trying to blow it. I'm just trying to maintain and you just wait for the right opportunity. Because the
Mhm.
thing with a lot of people is like they want to trade all day every day. In reality, you don't got to trade like that. You just got
Yeah.
to
No.
lock in profits and be happy.
Hmm.
Yeah.
Yeah. Um. All right. I think that was it. Honestly, I wrote down a lot of questions. So thank you.
Yeah, sure.
You
Yeah,
know,
just keep practicing, and then when you have more questions, just bring them up to me, and I can clear it up. But I'm pretty sure you'll pretty much get it down because it's not that difficult.
yeah, it's not. Thank
Yeah.
you so much, Shawn.
All right, no problem.